Good day, traders. Hope you had a fantastic weekend. This is Jeremy coming at you for the weekend market bias update for the trading week ahead. Today is Sunday, August 20th, and the futures market has just opened. Taking a quick look at the futures market here after the opening bell, it should be no surprise the market is trying to fight for a little bit of a bounce here. We are fairly overextended by pretty much all metrics. You can see the RSI here is signaling that we are in oversold territory and just got the bounce here, signaling potentially some upward price to come. That is not to say that this correction is over, however. We did come down. We set a nice doji on Friday. We are trying to fight back here. The most likely scenario is probably some choppy price action staying between the low of this doji here and kind of the support that we have at 43.50, and then below this diagonal support line here and or up to about 44.50, the breakdown line from last week when we started this sell-off. If we kick this out to a weekly chart real quick, you can see that this last week's candle tested almost to the penny the rising 20-period moving average. That is what caught the market and has so far held up. We are now in kind of pinch analysis. We have a decreasing 9 moving average here in green with the rising 20 in blue, and price is probably going to get caught between that for several days to start this week. We do have some economic data coming out later in the week, but Monday and Tuesday, we don't have anything of high importance to the market. So Monday and Tuesday should be a little bit of a reprieve to the market in that regard. Wednesday, we do kick off with flash PMI. Thursday, we have unemployment claims. And then Friday, we do hear from Jay Powell from the Federal Reserve talking. So we'll have to be keyed in and looking to see what he is saying about the market ahead and everything, looking for what the Fed is thinking, any signals or tips that they are going to give us in terms of potential future rate hikes or an extended pause. Anything like that will have potential to move the market. So going back to the chart here, that is basically the snapshot for the S&P. We do have a similar situation going on in the NASDAQ. So we'll kick it out to the NASDAQ right now. NASDAQ has broken the 50-period moving average, tried to test up, got slapped down, and we are kind of sitting in not too different of a place here. We are again between the falling 9 and the rising 20, again looking for price to kind of find some stability here. And honestly, I would not be opposed to seeing this week just stay between those lines on both the S&P and the NASDAQ. If we can stay below 15,000 and above about 14,500 on the NASDAQ, give a little weekly doji here, and then break back above the following week, I would really like that price action. It would give us some slowing momentum in the candles, a doji. It would confirm this support held and then move forward. But like I said before, we never know when the downward pressure is going to finalize itself until it does. So you never want to be premature on that. The story of this week is probably going to be patience. It's probably going to be a fairly low trading week as we let this price action simmer itself out. Do not try to be the hero. Do not try to buy in the face of a downtrend. We are setting lower lows and lower highs here. We are below the decreasing 9 and the decreasing 20 that is just breaking below the 50. We have a sell-off occurring in the MACD and lower highs and lower lows in the RSI. This is not the time to be a hero and buy in. If we do get that kind of V-shaped rally, so be it. Let those trades go. You need to learn to be patient and protect your money when you don't have the odds in your favor, even if in 2020 retrospective, you look at it and you say, oh shit, I wish I had. Wait, keep your powder dry, let this play out. Let's get through this following week and be very, very selective on the trades that you take. Again, just like last week, I'm going to be focusing mostly on cash flow option trades, selling covered calls and just earning a little bit here and there with high probability low risk trades while I let this play out. And again, just like the S&P, if we just kind of went sideways for the next week here and really formed up this 14,000 to 14,500 as a support level, and then saw a breakout again after firming that support level up some, I could see that being a very nice trade. And the reason that I say that too is if you look at this, obviously we have broken the uptrend on the daily chart, right? We had higher highs and higher lows, and now we have broken that. We broke several pivots on the daily chart. But if we go out to the weekly, you will see the last real pivot on the weekly isn't until way down here at like 12,800. So technically, we haven't really broken the uptrend on the weekly chart. That means we have multiple time frame analysis in play, that this is likely a correction, not a, sell everything fire sale. I'm not expecting the whole market to crash, but we do need some time to let this level out, form up some support, and then move forward cautiously from there. Let's go out now to the Russell. The Russell, I'm going to actually start this one out on a weekly chart. So the weekly, we have now confirmed a triple top here, and we have very defined support down here at around 1,700. So we are really kind of fighting between 2020 and support at 1,700. Price action in between these two levels, either way, is not going to surprise me at all. It does look like the market is trying to respect some of the weekly averages here and is probably going to try to bounce a little bit. I am anticipating it's probably going to stay at least for a few days under this curled over 9 EMA on the weekly. Our MACD did turn over bearish. We got a little extra volume bump on the sell with a larger bearish candle than the previous ones, showing increase in momentum. So we need to see that momentum settle out, hopefully get a couple of small candles here on the weekly chart that would basically translate on the daily chart to us doing nothing but go sideways and maybe try to reclaim this 200, but staying kind of in this zone for the next week or two. Again, if we can kind of see that price action kind of stay between these levels for the next week, week and a half. I know it's maybe a lot to ask in the fast-paced markets that we live in, but hey, we can always dream. If we get that nice sideways action, a break above would be awesome. If instead we get a fast rally up and then a breakdown again, I would be looking out below and looking for further sell-off to continue. So those are kind of the two scenarios that I am watching for, and we're just going to have to see how that plays out. Finally, let's go to the Dow Jones for the last of our 4 major indexes. Again, going to kick this out to a weekly chart. The Dow is holding up much better than the rest of the market. And a couple of weeks ago, or maybe last week, I think I said that I was expecting to be doing most of the trading that I do for the next couple of weeks in the Dow Jones, looking for companies that have good PE ratios, good earnings, and good dividends and good cash flow. So those are kind of the 4 priorities that I'm looking for right now. We are pinched between the 9 EMA and the 20, just like the S&P and the NASDAQ, but we didn't get a bigger sell-off, and we are still above the 50-period moving average on this, where we were below it on the NASDAQ and S&P. So generally speaking, it has held up quite a bit better than the other 3 indexes. So again, looking for this kind of hold this 20-period moving average, trying to stay above, let's say, 34,100, somewhere right in there. And if we do get a break back above about 35,000, let's say, to be a little conservative, I would expect a retest of this high if we do break back above that 35,000 mark. So those are kind of the lines in the sands that I'm looking at. So going out to our US dollar, this is the story that is causing a lot of the chaos in the market, a lot of the selling pressure in the market. The US dollar had ramped up hard over the last month, and now it finally did break out to the upside. If we want the stock market to give a serious bounce that signals to us a potential buying opportunity and not just a bearish rally, we need to see this roll over and get back down into this channel underneath 2870. If we see the dollar ramp up and continue up, there's really not much in the way of resistance above us, except for maybe a little bit out here at the 2950. But other than that, it would be pushing right back up to the highs here on the 3-year chart. And we really do not want to see that. If this dollar starts screaming higher, you can bet the equities are going to be selling off again. And that is always correlated to gold. So if we go into gold and check out gold, you'll see as the US dollar has been gaining, gold has just been in a 45-degree angle fall. It does have some support around 1900, below that around 1878. I would love to see it stay above that 1900 level. Long term, I think we are going to see a buying opportunity here, but it needs some time to develop. Down around the like 1878, 1880 mark, if we do get down to this 50-period moving average, I might start considering scaling into a longer term position. If that does break, then obviously the next support is going to be down around 1800 on the rising 200, and that would be a position that I would be looking for long-term adds to gold. On the short term, there's really nothing to see. We need to see this stabilize and break back above the diagonal resistance line that we have, and hopefully not just V-shape. We need to see it stabilize against the rising dollar and hopefully develop into a tradable signal. But there's nothing really that we can do, honestly, for swing trading right now. It needs more development. Last but not least, on the indexes we're going to look at today, let's cut to Bitcoin because it finally woke up from its boring slumber. The last few days, it just tanked. And there wasn't a huge catalyst that I heard about, at least on this, other than the market in general just breaking down. Risk is obviously a big part. Risk sentiment is a big part of trading Bitcoin. And that finally gave out. People said, you know what, we have fought this support level for a long time now and finally exhausted all of the buyers and the sellers won. We are sitting down on the rising 200-period moving average on the daily chart. And while we could potentially see a little bit of a rebound trade here, something tells me that the selling pressure is not done on Bitcoin, especially if we take it out to a weekly chart. It looks like really we are below all of our moving averages except for the 50 period. So this looks like kind of a significant level of support in my mind would be down around 24,500. So another almost 2,000 points potential to the downside. Can we get a little pop back up into the 200-period moving average before that, resetting the chart for another bearish move? Yes, we could. If we do, I will probably be looking to try to short that in some capacity with a tight stop on the other side of the 200-period moving average. Finally, let's go out to our market sentiment indicators. This one is our AR high-low. 2 closes consecutively below the -50 is considered a bearish indicator for the market as a whole. Obviously, we have had more than 2 consecutive closes here this last week. Basically, every day closed below 50. And so this signals there is probably more bearish side pressure, more downward pressure to come. So keep an eye on this, but it's signaling bearish. And then our advanced declining issues, really, instead of looking at the individual candles for a trend on this, we like to look at this blue line. This is the 20-period simple moving average. And when it crosses below the 0 mark, that is kind of when we adjust our stance to be bearish. So it did cross below Monday or Tuesday this last week. It is still below, and that kind of secondarily confirms the ARR high-low and what we are seeing in the broad market. To wrap up, guys, one last thing. If we go out to potential market movers, so this is our FinViz heat map. I switched it to earnings date, and you can see everything in green here is companies in the S&P 500 that have already reported earnings for this week's, or not this week, this earnings season. This week, we do have a few left. The biggest ones in my mind are going to be NVIDIA, coming down the pipeline here in just a couple of days. Avigo, CRM, Intuit. What other big ones do we have? Lowe's. The rest of these are fairly small potatoes. So Lowe's, CRM, Avgo, and NVIDIA are kind of the last four that I see being large potential market movers. Hopefully NVIDIA does not disappoint. Just to wrap up on a specific chart here, let's look at NVIDIA's chart, because last earnings, it gapped up huge and has been fighting to try to hold this gap and run ever since. It looks like that is probably going to break down, but we will see what happens there. And its earnings are on the 22nd coming up, so 2 days from now. So anyways, that's it, guys. Enjoy your trading week. Trade safe, be patient, keep your powder dry, and focus on cash flow trades and low risk trades this week.